Good morning. The Dow looking at its fifth losing week in a row. Inflation. All right. Inflation at 40-year highs. What is next? Future spike after comments from Putin. That's where that word came into play. Docusign and Rivian tumbled. And today's pre-market movers and much, much more. Today is Friday, March 11th. And if this is your first time, my name is Mark Hodge, and I'm head coach at Rockwell Trading. And on a typical morning, Marcus joins me, and with watchful eyes and almost 50 years of trading experience, we sift through a mountain of news websites, newsletters, and reports. And then we take the most important news and go live right here to share with you what you need to know as you head into your trading day. Now, I know many of you watch the stock market update every day, but if this is your first time, I know it can be a little overwhelming, so don't worry. We do have a special video just for you that we'll place in the description here, and it's a great place to get started. So, after the best trading day of the year yesterday, stocks did fall a little bit here. Let's look at the S&P 500. The S&P 500 did finish lower by 0.4%. So after Wednesday's strong rally, Thursday we did have a bit of a down day. On somewhat of a promising note, let me go to my charts. It's Friday. I have to do something silly. There we go. Marcus will be back here on Monday. So here's the charts. Here's the S&P. This is what I wanted to look at. And here we see that the S&P opened lower, rallied a little bit, then dipped, made session lows, had a little bit of a comeback, and then a early afternoon rally, went sideways, but ended near session high. So even though the S&P was down 0.4%, the S&P did manage to claw its way back from session lows here and finish near session highs. The Dow down 0.3%, similar chart pattern there, finishing the day near session highs, well off of session lows. The Nasdaq down 1% here, and after the lower open, again, making lows in the morning, getting higher in the afternoon, then just kind of going sideways, but finishing off session lows. That's always a positive here. So yesterday we did see a decline, Nasdaq leading the way lower, Dow not as bad, just 0.3% lower. But if we go to a weekly chart, the weekly chart is setting up to show a possible losing week unless there's a big rally today. Starting with the S&P here, the S&P is down 1.6% for the week, looking at its second losing week in a row. The Dow, on the other hand, is looking at its fifth consecutive losing week, down 1.3%. So unless the Dow rallies 1.3% today, we could see 5 losing weeks in a row for the Dow. The Nasdaq looking at a 2-week losing streak, just like the S&P here. Nasdaq down 1.4%. So another bit of a challenging week. And if we go back to a daily chart, we see big picture wise, it does look like we're in this downtrend. You know, we've been talking about correction and bear market territory for the indices, but it does look like the S&P is trying to hold up right here. So we're going to have to see. And there was some positive news that were impacting futures this morning. We've come off of the highs in the reaction, but this morning the biggest news impacting futures as we head into the open was it had to do with Russia and Ukraine talks. So Russian President Vladimir Putin said that certain positive shifts, so quote, certain positive shifts have occurred in the talks. Not sure what those were, but traders were optimistic. The report led to a spike in index futures, with the Dow jumping 300 points and a drop in crude oil futures. So let's actually just bring this up here. I'm going to go to the E-mini S&P. We'll look at a 5-minute chart, and you see here, this is overnight trading. So after the close yesterday, we went sideways, we dipped, made some lows in the Asian session, a little bit of a rally in the European session, and then this spike on that report. So traders were optimistic. It looks like the enthusiasm with that rally has subsided a little bit since there wasn't much substance to it. But futures are pointing to a higher start, with the NASDAQ leading right now, up 1.1%. And in return, crude oil did the opposite. Crude oil, when that report was released, you see here that crude oil overnight sideways falling and then rallying and getting up to $110 a barrel before falling again. And right now, crude oil futures just slightly positive for the day as we head into the open. But the initial reaction to that report sent index futures higher and crude oil lower. And we'll see how the markets digest things as we head into the open. But talking about other things in the spotlight, I want to go back to this economic calendar. We showed it yesterday, and we mentioned CPI data being a focus for the week. And this really has to do with what's in store for us next week. We do have preliminary consumer sentiment today at 10 a.m. Eastern time. But next week, with that inflation discussion, everything going on, heading into the Fed's two-day policy statement or two-day policy meeting, which wraps up Wednesday, March 16th with its statement at 2 p.m. and then a press conference at 2:30. So next week, the real focus is going to be on the Fed. PPI data is some information that the Fed will take into consideration. But this is a big deal for U.S. markets. And on a side note, it is daylight savings time going into Sunday. So fall back, spring forward. So just for those of you who do not observe daylight saving time, keep in mind that here in the U.S., most parts of the U.S., we will be moving our clocks forward. So let's get back to inflation and the Fed, the big talk other than Russia and Ukraine here. And this is where yesterday with the inflation numbers, they were in line with expectations, but inflation is at the highest we've seen since 1982, or really highs not seen in 40 years. 40 years. Wow. Treasury Secretary Yellen chimed in on Thursday saying that Americans will likely see another year of very uncomfortably high inflation. And then, quote, "We have seen a very meaningful increase in gas prices, and my guess is that next month we'll see further evidence of an impact on U.S. inflation of Putin's war on Ukraine," Yellen said. So Yellen, the Treasury Secretary and former Fed president, saying that inflation this year is most likely here to stay, and that's not fun. But maybe that's some insight into what might be going on with the Fed next week. We'll have to see. A quarter point rate hike is expected at this point, and we'll see what the comments there, the comments on what could potentially happen in the future, are what traders really focus on. It also today marks 2 years of the global pandemic. So 2 years ago today, the World Health Organization declared COVID-19 a global pandemic. Gosh, it's hard to believe that it was 2 years ago, but look at what the markets have done in the meantime. Pretty impressive move off of those initial lows and that reaction there. Speaking of impressive moves, let's move on over to Amazon. A mover yesterday. I was just curious to see how traders were going to digest the decision to make a 20-for-1 stock split. There was that $10 billion share buyback that also had some impact on this move, but up 5.4% and up 1.3% pre-market here. So Amazon, when that stock split goes into place, will be a 20th of what it is right now, making it a little more affordable for some investors, or maybe a little more attractive for some traders. Let's also look at a few other movers. DiDi's back in the news. This is probably one of the biggest IPO flops that I've seen, and what was once considered the Uber of China opened up at 1665 once it IPO'd, and it was just hammered from the beginning with issues, concerns, problems, and then there was news that it was going to be listed on the Hong Kong exchange, and now it's down another 11.5%. After a Bloomberg report said that the ride-hailing company was suspending plans to list its shares in Hong Kong. People familiar with the situation said Didi failed to meet demands by Chinese regulators, which included an overhaul of its handling of sensitive user data. So Didi just getting even worse. I mean, this one was just such a mess from the beginning. One reason, in my opinion anyway, to be a little careful when things IPO, sometimes there's a lot of hype, and if it is a solid company, many times you're going to see that there's an opportunity to buy it at a lower price in the future if it is not just a fly-by-night company here, and this proves that perspective. Let's look at DocuSign, DOCU, also getting hammered, down 18% pre-market. Traders trying to figure out, what is this worth post-pandemic, right? Getting down another 18% here. Reporting adjusted quarterly earnings of 48 cents a share, which was a penny above expectations. Revenue also better than forecast. However, the stock is down in pre-market trading after DocuSign issued weaker than expected guidance for the full year. So that's never going to be good for a company. Future profits, future valuations are what drive traders to be buyers, and that's why we're getting hit here. Let's look at Oracle too. ORCL is the ticker, and this one trimmed some of its pre-market losses. It was down almost 3%, now down just under 1%. So Oracle, they reported adjusted quarterly profits of $1.13, 5 cents short of expectations. Revenue was in line with expectations. They say that they continue to see progress in shifting its customers to the cloud, and cloud revenue has jumped 24% compared to a year ago. But earnings being slightly lower than expected. It looks like it's pretty much a wash as we head into the open. Not down much. Was down almost 3% earlier. We could also take a look at Rivian. RIVN is the ticker symbol. Another pre-market loser, down almost 10%. The electric vehicle maker reported a bigger loss than expected. So bigger loss than expected, saying that supply chain issues would limit its factory output for the year. So supply chain issues continuing to be an issue for some companies, and investors in Rivian not too happy with that, with Rivian down almost 10% pre-market. We could look at another company that is the Uber of Uber, not the Uber of China. Uber is the ticker. Shares are up 2.6% pre-market, so nice little move there. And what was going on? Okay, so they got an upgrade, and I don't have the German touch that Marcus does, but Deutsche Bank, right? Marcus, if you're watching, correct me if I messed that one up. But they initiated coverage with a buy rating and a $50 price target. So a $50 price target, analysts sometimes they're just blowing smoke. Sometimes they are pretty good, and a target of $50. That'd be good for Uber. So up a little bit pre-market, 31.21, up 2.6%, and it could be a positive day for Uber. One more to take a look at, Ulta Beauty, my favorite. Ulta Beauty up 2% here, and nice to see it break outside of this range. We've had some nice ranges here in Ulta. The cosmetic retailer rose 2% in pre-market trading after reporting better than expected profits and better than expected revenue. They also said comparable store sales beat forecasts with 21.4% of an increase. They announced a $2 billion share buyback as well. So using extra cash wisely, buying back some shares, which dilutes it reduces the shares in the open market, which causes an increase in value. So up 2% pre-market. Circling back one more time to futures, where's my list? Looks like the E-mini S&P is up 0.5% as we head into the open. The mini Dow up 0.3% as we head into the open, and the E-mini Nasdaq up 1% as we head into the open. So looking like a positive start for the markets. We'll see if we can hold on to those gains in the futures, and if it continues, it does look like we'll be finishing the week negative unless there's just a monster rally today. Monster rallies are good. We've seen crazier things with the volatility the last couple of weeks, so you never know. But it does look like we're starting the day positive, but probably ending the week in the red. With that said, I hope you enjoy the stock market updates. Marcus will be back with me next week. And if you do like these updates, please give it a like and feel free to join our channel. We love talking trading. We'll leave it at that. Have a great rest of your day. Have a great trading day, and